Well, ladies and gentlemen, I have a very special announcement. So today is that special announcement. Peter Tuchman will be the opening speaker for this FX Summit 2024 conference, the most anticipated conference in the world for traders. Peter, are you excited to come out to Dubai?
You know, look, I am so excited. I'm honored to be there and be your speaker, man.
Peter,
yes, let's go.
For the folks who are wondering, what do you do here at the New York Stock Exchange?
Okay, it's a good question. Look, as I said, I've been here for almost 40 years. I got here in 1985. When I got here, we had no technology, obviously. There was no internet. There was no computers, right? And I'm not that old, but you know, computers in the big picture are actually quite a recent an invention, to be perfectly honest. So in 1985, when I got here, we did open outcry auction markets, screaming and yelling, just so like you saw it in the movies. Everything was done on paper. Order flow would come from upstairs. You know, they would decide, they would write an order, they would phone it down to a booth. We're here in the balcony of the stock exchange. On the outside of the room are booths, stalls, basically, where we used to stand there with 100 telephones, get orders, come down, you'd write an order, you'd beep your broker, he'd come running in, you give him the order, he'd run out to the crowd, he would scream and yell. It was an open outcry situation. There'd be buyers over there, sellers over there, and you would trade. Okay, and that's how it actually happened. When you know, let's say I had 100,000 shares of IBM to buy, I bought 10,000 shares, I would and I would buy it from another broker. It was literally the beginning of the blockchain because every one of these trades had to be ledgered, right? So who bought it, who sold it, how many shares, what was the price, what time did it trade? And there'd be a guy called a reporter, and he would write all that down on a computer card. And so while I was reporting it to the clerk, who reported it to the broker upstairs, he was inputting it into this computer card, putting in a machine that went upstairs. It was being input into a teletype machine, which created the ticker tape. And that was how we traded. Now we use algorithms, right? You can be 10%, 20%. Back then, it was a lot more hands-on human interaction. So that's how we used to do it. Obviously, things over the years have changed. And now, look, technology has taken over this business like it's taken over every business. We are in the only human element marketplace still in the world. There were many of them, the Pacific Exchange, Amsterdam, the UK, and whatnot. Right now, the New York Stock Exchange, where we are now, is literally the only place where actual human brokers are trading the marketplace. So what do? I actually represent a hedge fund. Okay, I built about 15 years ago, I built a trading program around the S&P 500. It's a lot more complicated than I can describe now, but basically I built this strategy around trading the imbalances for the opening and the close. So I come into work in the morning, I get an overview of what's going on in the market. I'll read a lot of newsletters, I'll find out what's going on with earnings, economic data, and whatnot. I'll prepare myself for what's happening in the market. I will also track where the market's been trading 24 hours a day, because now markets trade 24 hours a day. I'll see where the S&P's trading. I'll see where crypto's trading. I'll get a sense of what's happening overall, check out how many wars we're in, what banking crisis started today, whatever. I'll come into work and I'll trade the opening bell. So I'll watch where the futures are trading, and the S&P 500 is trading away, right? Because it trades 24 hours a day. I will then see what the order flow looks like for the opening bell in New York, and I will trade the dislocation, right? It's sort of complicated to describe. I will trade what are discrepancies between where it's trading away and where it's going to open in New York. Yes. That's my opening trade. After that, we'll be talking to customers. We'll be preparing ourselves for the afternoon trade. Now, it's not the way I've always traded. In the old days, before a lot of this technology, I traded equities all day long. I had a lot of institutional flow and stuff like that. Now things have changed. A lot of big institutional people will use algorithms. They'll trade directly from upstairs. But so for my afternoon, the order flow that comes in for the closing bell, I will negotiate that, and I will trade the SPY, the spiders, and I will trade the individual names. There are 347 S&P 500 stocks that we trade here. The other 5,300 of them, 153 of them trade on NASDAQ, right? We don't trade a lot of the Googles and Apple and stuff. That's not done on the NYSE. And so that's my day.
So mostly on the NYSE, you guys are trading industrials, you guys are trading cyclicals, you guys are trading financial companies?
We are trading
like tech, or what's
we
trade
S&P
500 companies?
No, we trade virtually everything. There are plenty tech names that we trade here. We trade obviously all names in the S&P 500. We trade all the Dow stocks. We literally trade probably 3,500, 4,000 names here. Oof. So it has nothing to do with just SPYs or Dow or anything. We trade virtually everything except what's traded on NASDAQ. Okay. Right. So look, the reason tech is sort of migrated over to NASDAQ, it happened a number of years ago, and that's kind of where they went. But you know what? We are a much better exchange. Yes. We are the only exchange that has market makers, right? That's why you'll often see the volatility you see in tech trading tech, because it's trading on NASDAQ. There are no market makers. It's basically cowboys and Indians, you know, dogs and cats living together. Yes, crazy stuff. So it's a different marketplace, but we trade literally everything here.
The question that is on everybody's mind, and I know this is very important, where's SPY going next year? No,
you know, if you ask me where the market is going, is it going up or down? The answer is yes.
Okay, perfect. Can you explain the role of a market maker to folks? Because from a retail trader perspective, the market maker is this kind of illusion. It's this kind of like mythical thing.
You think he's a bad guy.
It's the Wizard of Oz behind the curtain.
Yeah, 100%.
Can you explain what a market maker really does?
100%. So look, take your camera and look down there for a minute, because these circular posts are where the market makers are, right? You probably can't see them from here, but you've got brokers on the outside of the room, and then these things that are circular like figure eights, those are market makers. Come on back here. So look, it's kind of bizarre. My partner, David Green, in Wall Street Global Trading Academy, used to be a market maker. He started on the floor as a squad. He moved his way up and became a clerk and then a market maker. And he was a market maker for many years before he got a buyout in one of the biggest buyouts on Wall Street, which was when Goldman Sachs and Spear Lees ended up doing a merger for $4 billion. Probably the worst deal ever in history of Wall Street, because it ended up getting sold for $280 million a bunch of years later.
Ouch.
That being said, David was a market maker. Now, for some reason, the retail trading community, and more now the newer retail community than in the old days, market makers have this identity that they're bad guys, they're thieves, they're trying to screw you. You know, they see your stop orders and they're trying to F you over, and they're trying to F you over. Trust me, I talk to retail traders all day. I know. And the bottom line is, if I can say it now and squelch all the BS, they are not that person. They don't do that. Trust me, they're trading billions of dollars a day. Your retail order, no disrespect to your retail order, whether it's 1 share, 10 shares, 100 shares, 1,000 shares, 50,000 shares. They are way too friggin' busy trying to protect their P&L, profit and loss, and trade the stocks for their company than to be worried about your stop order on 1,000 shares. It's just the way it is, right? So don't ever think that's the case. That's not who they are. They're not bad guys. They are there to inject liquidity into the market. So in fact, they're really good guys, because if you go to NASDAQ, you're going to see a stock go from 10 to 30 back to 14 all over the place, because there's nobody there flying the plane. The market maker is the pilot on a plane. Would you like to get on a plane, take off from New York on your way to Dubai, and everything's fine and cool? Suddenly you hit turbulence, you go to the cockpit and there's nobody flying the plane, and you go, holy shit, what's going on here? What are we gonna do? And you start going down towards the sea and you look like you're gonna crash. That's what it's like trading on NASDAQ. You're trading in a marketplace. You're flying in a plane where there's no pilot. A market maker is the pilot. He's there to create a smooth and active market. He's there to inject liquidity into the market. In the absence of a buyer, he has to buy it. In the absence of a seller, he has to sell it. He doesn't give about your stop order. He doesn't even see your stop order. Now, in the old days, he did see the stop order, because it was a different kind of business when we traded on paper, right? And stocks were going down or going up, and there was a big collection of stop orders in a stock. We traded eighths and quarters. We had a different whole nature of the business. Then he got involved when there was a stop that went off, because stocks tended to trade really volatilely back in the day. But he doesn't see it. He doesn't do it. That's not who he is. So once and for all, stop it. Look. Retail traders who are unsuccessful love to blame somebody for their losses, right? You don't hear bitching and crying from people making money that they don't like market makers. You hear the fetches of all the people who don't know how to trade, who are averaging into bad trades, who are not using stop orders, complaining and blaming the market maker because he screwed them over. That's not the case. Start making money, learn the game, get the playbook. Come, I'll teach you how to trade. Because if you were doing it right and you were successful at trading, you wouldn't look for somebody to blame your mistakes on and your losses on, and you wouldn't have this stick in your butt, sorry about my language, about the market maker trying to screw you.
Your energy's off the charts. The charisma is infectious, and we look forward to seeing you in Dubai. Everybody, make sure to grab your tickets to come see me and Peter in Dubai, and hopefully David can make it out as well.
Yeah, we look forward to it.
We'll have a workshop as well, so make sure to check out.
We'll do Q&As, we'll do workshops, we'll be there for a few days.
We'll include all of his links in the description below if you guys are interested in learning how to day trade from somebody with credibility. We're going to include those links, and make sure to follow on socials. Take it easy. Happy and safe trading.
Woo!
Peace.
Giddy up, guys.
Thank you so much, Peter. I seriously, I appreciate this more than you know. This is like Willy Wonka's factory for me.
You're goddamn right.